Welcome all to the node. I am Mike, aka Veteran Crypto, and popping into popping into this show is Akash and David. How's it going, gentlemen?
Hey,
Welcome,
Mike.
welcome.
So yeah, I'm super excited about this episode. Me and David have been looking at Alpend for quite a while because David is very steeped in DeFi, and I've been very bullish on Canton since I saw it pop up on RWA.xyz with massive amounts of TVL. The Broadridge repo market. Told David about it. He's been looking into it. His only hiccup right now is he's dancing around trying to find a wallet so he can hold Canton natively. But Alpend, we've been hearing good things from our community that got early access to it, and some really good yield and stuff like that. So actually, David, let me kick it over to you and let you kind of kick things off as far as the interview.
Sure, Mike. Good to meet you, Akash. Very happy to get started. And I really want to learn more about what it is that you've been working on building. And, for everyone in our community, they may not all be familiar with your project, Alpend, and what you've been building at Palladium Labs. So I want to just give you a moment here to describe at a super high level, what is Alpend for everyone who's watching this?
No, for sure. And thanks a lot, David, for having us here. It's been exciting building on Canton. And when you start with building, or even as a user, you start looking to explore a network, use DeFi. One of the first thing that comes in the mind, and which kinds of fundamentally establish for most of the markets, are a lending protocol, something like Aave. A venue where you can deposit assets to earn yield, right? Essentially to lend them and earn yield. And then the same venue that acts as a method for users to unlock liquidity against their assets. So let's talk about Canton, right? So Canton is right now, it has over $345 billion in RWAs lying around here. Then on top of it, we have $6 billion market cap CC coin, fully captured on the Canton Network. And then you have CBTC, you have a number of other bridged assets that are coming across to Canton. And all these assets need a venue where you can, against which you can earn yield, and you can unlock liquidity such as stable coins. So that's what we provide, right? Very simply, we are a money market protocol where you do that, where you post collaterals, borrow funds, earn yield, right? And then we do all of that in a fully confidential manner. So if you go on something like Aave and you post collateral and borrow, right, your liquidation positions is broadcasted worldwide, right? It's known. We have seen recently this hyper liquid whale hunting that went on for quite some time, right? Because the liquidation price was pretty much visible, right? So this is a very small example, but to relate that the kind of DeFi we are building here, we are taking away all those things which leads to MEVs, or which leads to these hunting kinds of practices. So that's what we are building at Alpend. I mean, of course, as we move forward, I will expand more on the Palladium side as well, that what we are doing here and how Alpend is one of the puzzle pieces that fits in our roadmap for Palladium. But yeah, Alpend is right now our most hit project, so just focusing on that.
Excellent. Well, I'm looking forward to being able to use, hopefully in the not too distant future, the Alpend money market natively on the Canton Network. So, let's talk a little bit about vision and your market position for Alpend. How do you see, Akash, Alpend's role evolving in the institutional DeFi landscape on the Canton Network over, I don't know, maybe the next 2 to 3 years? And what do you consider to be, some of the biggest hurdles to seeing like real mainstream adoption of Alpend? Or are you already seeing the adoption?
I think for Alpend, that's why we started with Alpend, because this is a product which has proven market fit uh, on many other blockchains that came before Canton, right? And pretty much these two things, right? I mean, if once a new ecosystem starts forming, you need to have a DEX, you need to have a lending market. There are many, there are Canton Swap, there is OneSwap, there are Tradecraft, a few DEX or a trading venue on Canton, and then there is a lending venue like us. So essentially, whenever a DeFi is starting, uh, the money markets like Alpend is right now sitting at a position where this is pretty much a product market fit. The bigger your collateral assets are now, definitely, whether it's a product market fit in institutional sense is a question. I mean, in case of retail or in case of the wider adoption side of, everyone in our community so far has loved it. And the answer is simple, because we solve a very basic problem that people in DeFi wants, right? I mean, like if I have spoken to many and many of my users, and the pattern stays same, right? The pattern stays that you are a most likely on Canton, you are a CC holder, right? You want to earn yield on CC. CC doesn't give staking rewards, right? So you don't have many ways that you can earn yield on CC. Kind of we provide one of the most risk-free or simple way for users to earn yield on their CC. So this is one. So why they come to us first is because they are earning these yield. Like right now, we are giving 6% APY on your CC. So if you're holding up, you just park it on Alpend and you start earning right away. Um, that's how user starts. And then once they come in, they post the CC, they start earning yield on it. They see that immediately they have a new line of credit that has unlocked for them. So if you came on the platform, deposited $1,000 of CC, you immediately see that while you can keep earning this yield, you can also borrow, let's say, $600 in USDC or $600 in BTC, right? So you might see, like, let's say there are, this is especially the last month has been looking like there has been a lot of PERP protocols that got launched on Canton. Now, if you are an avid DeFi user and now you posted a collateral, you posted $1,000, and now you want to also use, one of these perp taxes that came across. But as a CC native, you had CC in your account. You must have CC because CC is, you will pay the network fee for that. So that's a must to have asset in your wallet. But you may not necessarily have a stable coin. And you can bridge it over to from different networks, or you can simply use the same $1,000 that you posted as a collateral on Alpend. You can take that and deposit and use those stable coins on one of these perp taxes. So the adoption roadmap has been pretty much clear on this side. We don't think that the Alpend as a product has any question around it. The question has what we are building holistically at Palladium Labs, where Alpend comes in and how Alpend can actually fit into these different pieces that we are building. So, very high level, Palladium Labs, we have, we launched the company a year ago, rebranded from Bitcoin, specifically from Bitcoin to Canton. And the focus is that we build a holistic credit layer on Canton. Alpend was the first product that we built and deployed because it can be used for retail, institutional equally. But then the Palladium has these different verticals other than Alpend, which is more on the institutional side of things. So you think about structured yield programs, think about US Treasuries, the DTCC repo that is coming in, right? The interbank settlement or interbank credit assets. Those are the things that actually Palladium does as well. These are non-sexy things, I would say, which kind of the retail or You don't have a lot of spices to talk about, but these are real boring things that are doing this higher capital volume when it comes to Palladium. And how we envision is that all these different elements from the institutional finance that we are currently offering, whether it's a structured program, right, or whether it's a USD repo, treasuries repo that we are offering through DTCC or someone, right? How these can actually club together inside Alpend and use and draw the same liquidity that Alpend is built on. Now, of course, this requires more regulatory and compliance thinking, how KYC and permissionless pools work. So this is where we see where we are innovating on how this institutional money market can fit in with these different components for institutional finance.
So it sounds like you're building for institutions while at the same time building a retail-facing front end. And is it a shared pool of liquidity? What does the architecture look like? Or are these siloed pools of liquidity? Are they vaults? Have you been able to build a vault standard yet on the Canton Network, or is that still in the works?
Those are still on work. In fact, there are some amazing guys at Canton, including our partner BitSafe, and a few other guys who are using these reusable vault standard template that we look forward to use it. To put your first question in picture, it's a permissionless liquidity pools that you have on Alpend. So how Alpend works is that once you log in into Alpend, you will directly be able to see these permissionless pools. Like if you want to deposit CC and borrow USDCX, it's fully permissionless. You can do that immediately. However, let's say if you want to deposit an institutional asset which is only for the KYC users, in those cases, you will have to, if you want to access more features of Alpend, then you will have to KYC yourself. Once you KYC, then another set of pools will be accessible to you. And these are the pools in which only KYCs, depositors can actually access and enter in and then withdraw. So kind of we have tried to build Alpend as a best of both worlds, in the sense that where the assets which are open and permissionless, they can be used directly. We have kept them, kind of completely separate on the pool state level. While there are permission pools for borrowing USDCX as well. So if you are, if you care more about the compliance and who your counterparties are, then you can also borrow from these KYC pools. The yields are different, kind of the risk, it adjusts the risks for, what your assets are. But you can you have both these different assets or pools that are accessible to you.
Oh, very interesting. So I want to ask you a question about what it's been like building for institutions. So what lessons have you learned so far from working with, it sounds like, some major financial institutions on the Canton Network? And how does it differ significantly building for institutions versus building for retail DeFi?
No, for sure. I think our initial focus has been more towards the institution. And one of the insights is, kind of when we talk about blockchains, institutions, they don't care much about it, right? They don't care about, kind of whether it's a blockchain or what rails that you are using. The workflow or the assets, whether they follow the set rules that needs to be, that matters on, and the assets are compliant, or the movement, the flow of hands for those assets are all compliant and happening in a manner that can be, kind of settled with the finality, atomicity, right? That's what these institutions care a lot about, I would say. They value doing things right over speed, on top of, how fast we can do that. And that's how we are seeing that a lot of things now started to unfold inside Canton ecosystem. So it's been a year now. Slowly, in July we saw that the DTCC first production transaction was done, Canton was at the forefront of it. We are expecting somewhere in the Q4, mostly October, November, when the real assets from the DTCC will again start flowing in. And all of this has happened in this last 2 to 3 years. I think it's been a year and a half since the SEC no action letter was given for the DTCC, right, to be able to be pilot all these things. And when we are still looking to go and do pilot, right, I mean, it's a very controlled environment, right? It's a you have to be a DTCC participant in order to kind of involve even on the blockchain blockchain world. So I see a lot of people talking about that US treasuries coming on chain. That means kind of people will be able to use US treasuries on chain. No, that's not going to happen.
Really?
I mean, even when the asset will come in, the asset requires the mandate. The asset has a mandate that only the DTCC participants are able to hold and move around it.
Oh, okay.
So when you have this access restriction at an asset level, just because this asset now comes to the free open blockchain, rails, doesn't mean it's going to behave something like that. And this is the reason, right, that the pilots that we are doing is meticulously built up in that manner. Kind of we have to map out these different participants. It cannot be an asset that simply roam around. It comes in with all the transfer restrictions and access that needs to come with that particular asset. But still, it's a big unlock, because the collateral mobility becomes much more easier, even when you talk about bank to bank access, right? And or even kind of these institutional participants access, and they work seamlessly around it.
So, Akash, it looks like we've got a question from Lucas Hawkins in the chat here. So he's asking, how will the DTCC work with Canton Network, and how will that drive value capture to the Canton Network? I'm assuming here that he's also asking, how does Alpend complement Canton Network? So let me see if I can rephrase this. So how does Alpend drive value to the Canton Coin CC? Is there a value accrual mechanism there from Alpend, the protocol, to CC, the token? I'm assuming that there probably is.
There is. So, okay, let me put this in 3 points. I think, the way Alpend or Palladium, kind of directly complements or gives value to the CC coin, right? The first is the very, very direct impact that you can see. Palladium, as including Alpend, we have burnt over 20 million CC in the last 1 year as a process of building, doing pilots like integration, running traffics. So kind of you everyone hear about this Canton burn mint equilibrium, ask that kind of different people needs to burn in. We are giving a very direct forward example, right? That the Palladium Labs in the last 1 year of our operations, we have burned over 20 million CC. And we haven't burned just for the sake of burning. We have burned because we had to buy traffic from the network and use that traffic in our apps or in one of our pilots or repo structures, right? In all those cases. So this is one very direct way. As an app itself, it's we do that. Even the other apps who are building and growing with a lot of users, they do that. So this is the one direct way that Alpend adds value into the CC. We continuously keep buying CC in order to convert that into traffic and burn it. That's number one. Number two, Alpend is, of course, the Canton native money market that essentially provides that if there are users who are coming on Canton, like retail or institutionals alike, they will need a venue. I mean, what you will do with your asset, an asset that is just lying there is an inventory, essentially.
Right.
It's your inventory, right? You can have that asset, but it becomes a capital. Your inventory becomes a capital when you can unlock liquidity against it. So you may have a lot of RWA asset. You are sitting on $1 billion of RWA asset on Canton Network. It's as good as sitting on that RWAs on your home. I mean, of course, minus the custodian cost, whatnot. So I'm not saying that the tokenization itself doesn't have value. Tokenization itself has a lot of value. Like if you tokenize gold, you don't have to custody, you don't have to pay for the security. A lot of those, it comes, but materially things didn't change a lot. Now, once you have a tokenized asset and when you can finance against it, which Alpend provides, the value of the network grows exponentially, because now that asset is not just an inventory that's sitting on your balance sheet. You can use that asset to now finance against it. So this is the second important way that we kind of add value towards the network. And then the third is, building in, piloting, seeing where the industry is growing, like the DTCC pilots are happening, right? Broadways and a lot of institutions are building up and bringing in their application. So seeing in to support that, how you can innovate and build better products, better infrastructure, in pursuit of owning or building better stuffs, or having more adoption for CC. One of the example initiative we have is the Genesis Fund. I think 2 months ago around, we launched Genesis Fund. It's a 10 million CC grants program given away by Palladium. So, you can go to palladiumlabs.org/grants. And we are giving away these 10 million CC for these new builders to come in and to, kind of build anything on Canton.
That might be me. I would love to.
Exactly. Yeah. And kind of, we have been in talks with, and we have given up few of the grants, right? Where, kind of people have come in from very basic, kind of from different verticals and wanted to build something and add value to the Canton Network, add value to the Alpend. And we have, we have been doing that for, I think, 2 months. We've given away 5 grants so far, hoping to give 15 more in the coming, across next 1 to 2 years time. So these are the different ways, kind of the Alpend adds value to Canton.
Excellent. Well, thank you for that. That really does clear things up quite a bit. I want to ask you a question about the regulatory landscape. So, as regulations around decentralized finance continue to shift, and it looks like we might get some type of a vote on the Clarity Act potentially this week, how does Alpend approach the balance between being a privacy-first protocol while also remaining compliant with these shifting global standards?
So I think this is a general misunderstanding people have regarding being private and being compliant. We have heard this a few times, and this looks very, very obvious on the surface. But when we go down, inside, looking at that, how privacy works on Canton, right? So privacy in blockchain essentially stemmed originally where, in which you would put a transaction, which had certain information, and especially the GK blockchains popularized this a lot. And you kind of pack this into a zero knowledge string, and then you broadcast this to the network, with which anyone can verify, right? That without looking inside of the transaction, they can verify that this is the transaction that, let's say, was done between these two parties. In case of Canton, right? Canton works on a selective disclosure kind of a model. Its privacy is not to hide from regulators, but the privacy is designed especially in a way so that it remains compliant all the time. So what the selective disclosure model allows you to do is that when the two parties are transacting, we are not tuning this into a GK transactions, because the problem with the GK transactions happen is that, and there has been a few cases, which is true, where, like, let's say I did a transaction, Akash did a transaction to David. Now the transaction has been packed into a GK, and now an auditor or an external regulator wants to unpack that information to see the detail of it. And the blockchains have to say, no, we do not have a way to actually see inside this, because we have packed this into a GK string or a GK rows, right? In case of Canton, we do not pack the information across anything which cannot be unpacked off. In fact, when you are writing transactions on Canton, you have a specific method in which you add your regulator, you add your counsel or the parties who need to see some of those information, while of course everyone else, so all those parties who have been involved in that transaction, they can only see that. And that's like the beauty of this selective disclosure model, which Canton pioneered, that only people need, kind of on a need to know basis, they are able to see this. So all the transaction, all the information is everything there. But if just Akash, David, and one of the regulator need to see that transaction, that's it. Only these three can see the transaction. And this is the way that, kind of all the transactions have been not just compliant, but kind of becomes friendly for institutions and regulators to actually work in this framework. Because the regulators do not want to choose an option where either they are choosing an option where everything is publicly broadcasted, or the information cannot be unpacked, once the transaction has happened. Both of these other models are kind of is not very favorable for institutional finance to happen, and that's why kind of we have this slow and small friction on moving this forward. Canton solves this for everyone. So
it sounds to me, Akash, like compliance is built into the DAML smart contract language from the bottom up. Is that correct?
Yes, as an offset, you can say that. What DAML provides is that it's a way to directly encode a financial agreement, and of course, compliance is the very kind of the rock-based layer on which all these financial agreements are built on. So you're very right to say kind of when you say that it creates the base layer of it, no doubt.
Excellent. Awesome. And it looks like we have another question from the chat. Paulo is asking, since Canton handles real world assets and Alpend builds the, I guess you could call it the credit infrastructure, will it be possible to borrow against real estate assets?
As soon as some of those assets arrive. I mean, that's what Alpend has established itself. We started borrowing against CCC, BTC, these crypto assets. We are running our final tests to include the commodities market. So very soon you will be able to put as a collateral as a gold and silver and borrow USDC. So there is, of course, nothing is stopping in that sense of real estate tokens. Definitely, as a market, we try to protect our users, because one bad asset can lead to kind of collapse or loss of certain kinds of users. So, and we are very strict on what kind of assets we onboard on our network, and that's why there is a slow process, because the due diligence has been very hard on it. The liquidity required. So there are a list of check marks that we need from that asset. As soon as we have an asset which have sufficient liquidity, which kinds of fulfills all the bars, we are easily able to include that as a as a collateral. So regarding real estate as well, it's same. We are waiting for such a high quality real estate collateral to come on board on Canton, and we will be happy to finance against it.
Okay, so something that you said there, Akash, I want to just drill down on that for a moment. So you said that you're performing all of this due diligence on the assets that you're onboarding onto the protocol. That sounds to me like, would losses be socialized across all, I guess you could say, creditors or depositors on the protocol? If there is one piece of collateral that is marked down by 50% or marked down to zero, would those losses be socialized across the entire protocol? Is it pooled or is it siloed?
Across pool. I mean, but of course, before saying that, we will say that there are multiple level of securities in place, right? I mean, of course, the first level is our due diligence for the asset itself to ensure that the asset is of high quality. Then second is our liquidation system. So every asset you borrow against, like for coming back from my original example, if you posted $1,000 of collateral, you can borrow probably, let's say you deposited $1,000 of CC, you will be able to borrow at max something like $600 or $700 of USDCX. So there will be a lower LTV. And if the LTV rises above a certain level, then your position will be first liquidated, and there is enough buffer, right? In fact, we have made certain novel arrangements around the liquidation as well. We have kind of created a product. We have productized our liquidation system. So rather than, because we believe that the liquidation kinds of creates MEV bounds and rules. So how about we create a product? It's a bot where users can socialize their funds, and this fund will be used to liquidate those positions, and then whatever the liquidation gains are will be socialized among these pools. Right now, those pools, it's an off-topic chat, but that pool is right now giving up something like 21% APY on your USDCX holding, and it kinds of liquidates all the position that needs to be. Yeah, but coming back to the question in hand, of course, we have liquidation position that's been made novel enough with our own pool of capital that I just described, which provide this 22% yield. Our own pool of capital, which always looks out that as soon as there is a position that becomes liquidatable, they take care of that position, kind of ensuring that there is no bad debt that go on.
Right.
After that, there is a protocol safety buffer, in which kind of the insurance or the protocol safety buffer that kicks in if in case certain bad debts come in. But of course, in a very you cry kind of a scenario where a collateral completely collapsed for some reason. Of course, in those cases, and there is nothing can be do, protocol will automatically socialize the losses that has happened
Okay.
in that particular pool. Yeah.
Understood. So my follow-up question to this is about oracles. So what type of data feeds do you pull in order to, have a real-time price feed for, let's say, a Bitcoin piece of collateral, or maybe an Ethereum piece of collateral? Or how would you price more opaque pieces of collateral like, an RWA asset at some point in the future? So what oracles are you using right now?
So right now, every price feed we ensure that those price feeds are available on Chainlink.
Okay.
So right now, Chainlink is the de facto standard that we have adopted. It is working well for us, at least in the crypto market and the commodities market, the two markets that we have integrated so far. And of course, there is talks with other, uh, oracles that has also came on, on Canton Network, which kinds of extends these to materially to other kinds of assets, such as credit notes, or evaluating more of an yield-bearing assets and things like this. But of course, for the first year, we believe that the main larger asset market, the commodities market, are what we are going to stick to, and Chainlink will be able to serve that pretty well because, of course, it's one of the most long-standing oracles.
Excellent. So let's talk about ecosystem growth then. That's my next question. So, obviously beyond these current yield generation models that you've been working on building, what new features or asset classes is your team most excited to bring onto the Alpend protocol next over the next, 12 or 24 months?
So one thing we are heavily emphasizing is on these KYC and regulated pools. And I think this is where the majority of focus in the next 12 months will be. Think like fixed term funds, assets which are not as liquid. So right now, all the assets that we finance against are highly liquid asset. But however, there are some very good assets in the Canton ecosystem, which remains, say, illiquid for 3 months, 6 months, 12 months tenure, right? Right now, on most DeFi, there is not a way to finance against it.
Right.
We are kind of building up some models that how we can finance against those assets, right? With the assets which are very robust, have proven, kind of backing custodians, right, coming in from the institutional origin. So we know that those asset has a very good backing, and then kind of create a fixed term fund or money around it. So this is the main, I would say, a challenging thing that we are focusing on to build. Other than this, Palladium, we are already running some of these structured yield programs, especially for accredited investors and larger participants. We are seeing that how we can build or work with Canton to fractionalize some of those assets, fractionalize some of those larger assets, right? Like, because those assets demand credit deposits of, say, minimum $250,000 or $1 million. How we can fractionalize those assets and bring
Interesting.
it into, for a more wider availability. So that's more of a legal counsel thing that we are doing. But we hope that, kind of, as we are getting more and more clarity around how institutional assets are supposed to behave, we are confident that some of those high quality assets we will be able to bring on to Alpend for the wider general audience to, capture or to use for.
Excellent. So, my next question for you, Kash, is about some advice for builders. So, what advice would you give to maybe another founder who's attempting to build a compliant or institutional-ready infrastructure, in an ecosystem that's as rigorous as the Canton Network? What type of advice would you give to that builder?
It might go very generic, but I would just say that do not chase narratives. Founders, they get tempted towards changing some of the narratives that are currently working in the industry, and suggestion would be to focus on solving a problem that will still exist, 24 or 12 to 24 or 36 months down the line. Because especially in our industry, right, narratives change very fast,
Yeah,
but the users' problems, they don't. I mean, me doing a stablecoin transaction, and I don't want that my other vendors should not be able to see that information while I use something non-custodial like my safe Genesis safe wallet. It's a problem for me ever since, kind of, I remember.
yeah.
I didn't wanted people to see my transactions, that, who else I
Neither
am.
do I.
So the narrative change. Maybe we can say that, we are in the privacy era of narrative that came. I'm not sure either we are already out of it, but I think that in the past recent year there was a time when privacy was a very narrative buzzword. But the problem has been way before that. The problem has been for many years, and this problem will exist for many years, right, until we solve it completely. So just this is my advice, that, kind of focus on the real users problems rather than the narratives, as narratives will flip. VCs will focus elsewhere. But if you want to build an insight into something, you will have to keep focus on that particular era in which the problem exists. So yeah, I think that's just one simple piece of advice I have.
I like that. That was great. Thank you. So I've got another question here about future trends. So I think that this is just a follow on to the advice for builders. So as we look ahead to the next cycle of blockchain adoption, how do you see the definition of decentralized finance shifting for institutional players compared to retail?
So DeFi has a huge potential in cost saving. I think, we have been building a model around DTCC itself, for example, in which we saw that the current way of operating a dealer broker, right, or an ATS or a prime broker, for example, right, which sits
I'm
in the
sorry,
trade.
Akash. I'm sorry for interrupting you. What is an ATS for all of our viewers out there who may not
So
know what that
ATS or
is?
ATS are like something similar to like these broker dealers. So these ATS or the BDs, the broker dealers or the prime brokers, these are uh, regulated, kind of brokers or institutions who can facilitate trade for for one of the parties. So for example, to put in, this is like a very general way of how institutional finance work. If two large institutions are looking to trade, they will almost never do directly with each other. Each of them will face a prime broker or an ATS or a broker dealer. So, kind of both of them will face those people those regulated players, and those regulated players will, kind of act on the behalf of other. So rather than two parties, two institutions, they have to go. It's pretty much a mandate that they will have to go through these broker dealers or ATS in that. So what we have been seeing that, kind of, and they are these prime brokers or these broker dealers are a very important piece of these institutional regulated finance. But what happens is that even in their case, their capital is stuck is a big problem. For example, let's say, David, you wanted to buy $100 million of Bitcoin. I wanted to sell. It's very odd because I would never sell, but
I would hope
I
not.
didn't even have $100 million of Bitcoin. So for the case of hypothesis, let's say that I am selling $100 million of Bitcoin. So what will happen that our broker, for example, kind of we took a dealer broker, their broker dealer, they will make a trade for me for the $100 million and for you for $100 million, and their balance sheet will get blocked for this $200 million, for this 100 million millions of trade that we two are doing. That's how, kind of this ensures that the transaction happens, right? Now, when it comes to DeFi, when these broker dealers can automate some of these parts on contracts, right, and the two parties agree with those contracts, in this very simple example, some of those large funds, the $200 million that we talked about, that doesn't get blocked anymore on their balance sheet, while they are still intermediating the funds, because of course the large institutional players, they will still need someone to, kind of ensure that their trades are going all regulated, doing KYB of the other party who is involved. So I do not see that they will be totally removed from the picture. They will still be there, but they will be much more capital efficient. And of course, when
Is that because of, I'm sorry for interrupting, is that because of atomicity, the way that these trades
Atomicity is
settle
one of,
on
yes,
chain?
atomicity is one of the reason. Atomicity is one of the biggest reason that the two parties can now trust each other and ensure that the two
Right.
legs of transaction will happen simultaneously. So I will definitely say that this is the core crux of the property, but then there are many things that actually make this happen.
I know both of you gentlemen know what that word is, but what exactly is that atomicity or?
So I'll take this. So atomicity is very simply uh, a way in which you ensure that if a transaction is being done, the transaction will either fully complete atomically, or it will roll back and go away to each other, kind of to their original owners. That's what, kind of in a very simple way, the atomicity means. So like in the previous transaction where Akash and David was doing this, swap transactions for $100 million of USDC to BTC, both were exchanging hands. Why we needed a broker dealer or an ATS in first place? Because we may not want to fully trust each other, that who will give the money first. I may give the money to David, and then I'm not sure that whether I will take it from David or not. So that's why we both face a broker to ensure that we both are safe in that transaction, and the broker completes that. Now the atomicity does the same. It doesn't do the same role, but at least because we know that this contract is atomic, we both are we both can easily go there and say that, okay, we both have put it the transaction. Either the transaction will complete fully, the other party will receive what they need to receive, or the entire transaction will roll back. so no one will lose funds on it.
Exactly. So, and thank you for that, Akash. So let's talk a little bit about philosophy of innovation. So when we're evaluating these new architectural pivots or integrations, using Alpend on the Canton Network, what is your primary decision-making framework when you're thinking about building some type of new architectural framework? What is it that you're thinking about here? Let me give you maybe a little bit of an example. So if you're thinking about integrating some new piece of RWA collateral, what is the architectural framework within which you work? How is it that you think about building for that?
So first thing we will look into that is who are going to use those assets, or who are going to use those workflows. What do they care about? Do they care about privacy? They care more about compliance. They care more about user experience, right? So different types of these users care about these different kinds of things when they are coming to make a transaction or make a trade. And I would say that before we go into the architecture, we would think about that what that user will want, what is and go as deep as possible in the sense of their mind that how will they be using it. Now, once we have a framework that what these users will do, I think this gives us a very clear, distinct message that what the product should be built around, where the product should focus. And then comes to the technical part of the angle, I think, which you asked, and that an RWA asset come in, we will strip it down into its different property. Is this RWA liquid? If liquid, how much liquid, right? Whether we find some secondary providers where on which we can buy on demand. Is it very highly liquid, something we can create a pool, like a liquidity pool on DEXs, and those pools itself will start becoming to trade? So, we will go down inside the different capabilities of these. When does many of these RWAs are yield bearing? What's the coupon rate? How frequently the coupons are being paid? Are they paid weekly, monthly, yearly? And then, you put on these different pieces of these are because every RWA is not same. Fortunately, every collateral in crypto used to be same because everyone used to be a crypto collateral. You have to have a liquidity pool or a secondary market. But with RWAs, things are changing. RWAs doesn't necessarily always have a very highly liquid pool just like the cryptos did. So you will have to map down the liquidation pathways. You will have to map down this different risk framework that on those scenarios how these assets behave. Can we pool this? Can we bunk the liquidity with the other pools? Or do we have to keep the liquidity completely separate away because of the kind of risks that are involved with these assets? So these are the questions that goes on in the mind. And I think other than that, Alpend, as from the infrastructure or from the tech perspective, we built in a very modular way so that, we can easily take these different pieces as long as it fits. Although every day today we see that these different new kinds of asset that doesn't fit as a simple building block, we have to build a new block and then put this inside the Alpend piece of a puzzle. But yeah, that's how generally we take new assets once they arrive in.
Thank you. So I've got just 3 more questions. You've been very generous with your time today. I know that it's been 50 minutes already. I want to ask you about community and culture. So what does the culture of Canton native development look like to you? And I think that you touched on this a little bit earlier. How does it compare to other ecosystems that you've observed?
I think from a builder's standpoint, Canton has a very different way of rewarding builders or creating these incentives or economies around it. And those incentives and economies can be seen in terms of what the builders are building on the ecosystem and how well they collaborate. Definitely one thing, kind of I in the past I have worked on several different projects, including I have been a part of the Bitcoin project as well. So I have collaborated with their developers. Although of course that was a much smaller industry than I have collaborated on something like Sui blockchain. One thing is definitely I see that the most of the devs here on Canton, they seems lost, a little bit lost. And the major reason is because the blockchain is very different from every other blockchain that has came before. Uh, even when we entered into the space and we were coming on from building on something like Ethereum, Solana, Sui, we have built on everything else. But once you come on Canton, um, things are behaving in a very different manner. That requires, honestly, I would say that this is a challenge with Canton as well, but this is an opportunity for builders as well. That there is a slightly a bit of a steep learning curve when you are coming from other space to Canton, and the reason is the infrastructure. Kind of the way Canton enforces developer to build is that you are, maybe technically I'm not very right, but just for the sake of discussion, you think about that you create your own network, a smaller subnet that is connected to the Canton network. For every application, if you are building, you must have to kind of access that. You must have to access or create a subnet where you use those frames. So this kind of creates a steep curve. However, I would say that the community, the developer community, has grown tremendously, especially in the last 3 to 4 months, I would say. Initially in the beginning of 26, it was a little slow, but in the last 3 to 4 months, it has really exploded. Um, Canton Foundation is doing a great work in creating documentation, ensuring there are enough services in place so that the developers have, kind of the steep curve that we had is now much lowered. They are doing their best towards, and I think at certain level they have done that as well. And then now there is now a small culture that has started to growing up. I would still say that the developer culture that's there on Solana or Sui is still far more mature. I will not lie in saying anything else about Canton. There it's far more mature. And the reason is everything is built interconnected in between those developers, while here there are a little bit of problems or confusions you will see in that same, that there is some large body, like say for example Broadrise is running an application. Now for an entrepreneur, kind of you will think that how I can leverage actually this Broadrise
Right.
platform, kind of build that. But then it's very difficult, right? It's been built for a particular purpose. You are not going to get the access of it. You may get access of it. You will have to go through the right channels. You will have to kind of convince them, get partnership. So that's a slightly bit different. But as we said, that in the last 3-4 months, especially on the retail or the permissionless side, a lot of things have been done. And I think there we have some of these Canton, ecosystem BD. I see that, kind of while I'm chatting here for like 53-55 minutes, and
Right.
probably 20 messages have been exchanged on that particular Telegram group, where these ideas have been shared and talked about. People are being connected through each other. So I would say that definitely this ecosystem has started maturing up. Maybe in another 3 to 6 months, we will catch up to something like Solana, which has, kind of a much of a herd, kind of developer socializing mentality. And I think
There we go. So looks like Mike is bringing up your website, the front end here, Akash. And as he does this, I've got a question for you, because let me give you an example of something that I've been thinking about building. So on Euler, there's the Vault standard, ERC 4626, and anyone can build using that standard. Do you see at some point in the future a developer like myself being able to build on top of Alpend? Maybe you'd create a Vault standard that I could then use to create my own, maybe like a private credit facility, a permissionless vault that I could whitelist users into. Do you think that could be on the roadmap at some point, maybe?
Yes. In fact, it is already. So when I talked about this 10 million CC grants program that we are running, it is specifically to that. So, on platinumlabs.org/grants, you will see a wish list of applications that how you can actually connect, how you can build your application that will connect to the Alpend. It will use its liquidity. So say, for example, something similar to what you described, you can create a vault which is taking delta neutral positions across your assets, right? You can do that. And and to take a delta neutral position, you will need to borrow assets against. You can easily integrate that and kind of start using that. We have already also started giving out some of the developer APIs. So a few teams, like a few people, the wallet companies are already integrating this functionality of lending and borrowing right inside their wallet. So think of
Great.
that you are building a wallet. That wallet is holding some CC, and right there you can see that, okay, you can earn 6% yield on that CC, and you just tap the button over there, and kind of that without leaving that wallet, you are now going into that pool, especially. So all of that is possible. Some of that is happening today. More of this will be opened in the near future, for sure.
That sounds great, because I can think of plenty of different interesting proprietary trading strategies that I could build using Alpend, maybe some interest rate arbitrage plays, or maybe some type of statistical arbitrage play that could be interesting. So, man, I'm definitely going to apply for a grant. This is awesome.
I have one last question. How can I get access to Alpend? I've been wanting to look behind the homepage here, and I requested early access. I would love to.
You just need to, Mike. You just need to drop your email in our little group, and our marketing guys will take care of it. Although
right.
for a while we had not been able. We have been reached at capacity, so we have not been giving away the public whitelist. But of course, for you it will be an exception. So you can just drop in your email ID that you signed up with,
and do you mind if we kind of show kind of the UI UX and stuff like that once we have access?
Yeah, I think. Let me see. It should log in. Just let me confirm. I can share my screen.
I've been really excited because obviously we've been involved with Canton, and even before the token launch, I found a way on, I think it was Kraken, to get exposure to the asset before the token generation event, and this is kind of the first real place that I've seen that's going to have the potential to earn with the Canton token, which is a huge part of our channel here. With David, and just we're very DeFi focused, because we focus more on long-term investment. We do show some trading and stuff like that, but me myself, I'm looking for long-term investment. I want to be able to buy good solid assets like Canton that have good tokenomics, that meet our trifecta of constant growth and onboarding of new clients, new developers, things like that. Those things that are built are generating actual fees and revenue. And then those fees and revenue, there's a direct connection to the token, in this case CC, to where there's value capture, to where it actually, by holding the token, you have a direct connection to those fees and revenue. And with Canton, of course, to that burn mint mechanism. And we always point out, right now, Canton is still inflationary. It's going to take more adoption. It's going to take more burning of the token to flip deflationary. So, we're always very transparent here. We're all about pointing out all the aspects, good and bad, about projects, so that people fully understand these assets before they invest in them.
So, Akash, I just went ahead and submitted an application to be able to use Alpend. The email address there is david@thenode.pro. And the moment that I have the ability to use the front end, I'm going to start, operating in DeFi on Alpend. And I'm also very, very excited to submit an application for a grant. I think that, I've been working on an EVM dApp for quite a while now, but being able to build that natively on top of your infrastructure, I think that makes a lot more sense, because I think that Canton Network is going to be the chain for regulated institutional DeFi. And that's really what I want to build for. So this has been great. Thank you so much for your time. Is there any way that you can show us what Alpend looks like? Could you share your screen?
I can, if I can directly share my screen.
Yeah, so I think, Mike, at the bottom of the screen, is there a way for Akash to share it?
Yeah,
you should just a little monitor with the plus sign.
Okay, can you guys see this?
There we go.
There we go.
All right. So very simply, once we will approve you the access. Once you have, I'm sure you guys, when you signed up, you already have Canton Loop account.
Yes.
So right now we only support Canton Loop because that's the only wallet we have right now in the Canton ecosystem. Okay, so I'm gonna approve my wallet connection request here first. Okay. So right now you need to have a Loop wallet in order to access Alpend, because Loop is the only multi-party distributed wallet. We value decentralization and security a lot, so that's the only wallet right now you will be able to connect with. Once you connect, this is how a new account looks like, right? You can deposit these assets, CC, USDC, XC, and then once you have deposited one of these assets, you can borrow one of these assets as well. So far we have seen that CC is the most deposited asset and the USDCX is the most borrowed asset. So you can see that on CC you can earn something like 6.28% APY. On USDCX it's very good 17% APY. Of course, you can go inside a particular asset.
So Akash, I've got some questions right off the bat. It looks like I could run interest rate arbs right there. Are these yields incentivized in any way?
Yeah. So some of them. That's why we are keeping a track on the arbitrage directly. So you can see that like here, there is this is the 7% APY is the base yield that is coming from the borrows, and 10% is the incentivized APY that we are giving. So right now, you can do interest rate arbitrage through other platforms, but our tech will stop you from doing interest rate arbitrage between our pools itself.
Right, that makes a lot of sense, because it would just be farming the incentives. Yeah.
Yes, I mean, we want users to earn these APY, not problem, but of course, it doesn't make sense for us to allow looping.
Right. Yeah.
Just about yet. Yeah. So you can see the details of those assets, and then once we have the gold and silver, we are hoping the gold and silver will be accepted in the assets to supply as well, and then you can borrow some of these assets against your gold and silver coin. Of course, a disclaimer: right now the application is in private beta. We have finished one round of full audits with Halborn, and we made some changes, and now the deployment audits are going on again with the Halborn itself. We expect this to finish up in the next week or two, and then we are gonna lift up the caps so more people can start using it.
A 17% APY that for single lending, a stable coin, that immediately puts Alpend in the very top tier of money markets across all protocols. Not just, I haven't taken a look at, many other money markets on Canton Network, but to single
right now
lend,
we are the only pooled money market that is available on Canton.
Yeah. So I mean, to single lend USDC and earn greater than 10% APY, let alone 17% plus APY, like that is extremely good. Extremely good. I would love to be able to do that. I would bridge liquidity on over to Canton Network right now today if I could earn 17%.
Yep. Just be way out for the, again, I will emphasize on the private beta side. I don't want, so of course, do your own research. Definitely feel free to park some capital. one round of audits are done, second will be done in the next week or so. But of course, with that, incentives might tiny bit come down as well, as the
Right.
audits
Yeah,
will
they
finish.
tend to. Yeah.
So all of these are related events.
Well, that was great. Akash, thank you so much for your time. Very generous with your time today. You gave us more than an hour of time. Thank you. This has been so eye-opening to learn about Alpend. I can't wait to use the protocol natively. And again, thanks so much. Mike, what do you have?
I dropped our emails into the Telegram for you, Akash, and thank you so much. We greatly appreciate having you on. Hopefully, we can have you on again once the platform goes live, and I'm sure we'll probably be seeing you on the Canton News Twitter Spaces because we're hosting that now. So,
Oh, fantastic!
Really, yeah, well, really excited to get to know you better.
Great. No, it was wonderful, gents. Thanks a lot for your times as well. And I definitely hope to come back soon again and talk more.
Absolutely.
Of course. Well, thank you. Have a great rest of your day.
All right, take care.
That was awesome.
Yeah, it was. No, I've been wanting to get access to Alpend for a while now because a bunch of people in the community have been talking about how they've been earning with their CC. I mean, I don't even care if it's 2 or 3%. I mean, at least
I
being
do.
able to.
I mean, 17%. That looks amazing.
Well, for stables, but for my Canton token, I would love to have
6%. 6%. Yeah.
No, what I'm saying is even like at 3%, I mean, just to have a place to hold my CC and
to park
actually
it.
earn, to earn.
But it's
CC.
not just that. Did you hear what Akash was saying though, Mike? He was saying not only can you just park it, but you can collateralize it. You can access liquidity against it. So,
absolutely.
So, I mean, basically, like what I would do is I would use Loop Wallet and I would, number one, bridge some liquidity on over from EVM to Canton. Once I've got, some CC, then I would take that CC, supply it, collateralize it over on Alpend, and then I could immediately borrow dollars against it, USDCX. And then I could bridge those dollars back on over to EVM World, do something else with those dollars in EVM World, or I could take a look at some other opportunities in retail-facing Canton Network DeFi. So I'm starting to see this ecosystem. It's definitely growing. It's definitely growing. And my dad's saying that was an eye-opening interview. So, yeah, I mean, isn't this stuff great, man? And we're literally on the ground floor with this Canton Network. I've got to start building on DAML, D-A-M-L. That's the programming language for the Canton Network. And now that I'm becoming more familiar with the grant programs that are available, and also, I mean, look, and it looks like Alpend has an API. So that means that I could build either private or permissioned vaults on top of Alpend. So that laminar idea that I built out for EVM using Euler, I could build that directly using Alpend. And so that would mean all of a sudden the Canton Foundation grants would become available to me, because I don't think that they would, fund a project built on Ethereum. But I think that they absolutely would fund a project built on DAML using Alpend vaults.
I wonder if they would if like once Zenith launches and and it allows those.
I was thinking that too.
You know what I mean?
Yeah.
Maybe. Just curious.
Yeah, but I mean, I'm taking a look at the Canton Foundation, the Protocol Development Fund that the gentleman over at Cashin referred us to just yesterday, Luke. The Protocol Development Fund. This looks really interesting. And then, over at Palladium Labs, the grant program that they have, I think that there's a huge opportunity there, because these new DeFi products that are maybe a little bit more permissionless and retail facing, I think that's really what Canton Network needs to get retail onboarded. So, the Loop wallet is relatively easy to use. It looks like the Braun wallet is also relatively easy to use. I think Loop is probably the only one that's going to work in like Canton native DeFi. But I'm starting to see how this can all be built out. This is great. So what you got with Canton Army and Luke? Yeah.
So yeah, Loop is the one that obviously works with Alpend. I also have Braun, and I'll be excited because it is the UI UX is I really enjoy Braun. But a lot's to be determined. How what platforms it's going to be compatible with. But I just wanted to share this. So this is Canton Army. The creators of Canton News. If you haven't checked that out, I highly suggest you do. This is where I go. It's a great place if you're bullish on Canton. It's everything that's going on with Canton. You can find all kinds of tools and resources. And full disclosure, we've entered into a collaboration with them where we are hosting their Twitter Spaces. And so this Thursday, David will be interviewing. I'll be there as well, but David will be interviewing Luke, the CEO of Cashin. And they actually are giving away 2,500 free CC to 25 winners during the space. So if you want to earn some free CC, make sure that you tune in to qualify. Follow Cashin and the Canton Army. Like and repost this post. Join the space and ask a question for a chance to win. So be there. We'll be able to bring you up on stage if you have a good question. In the chat, we'll bring you up on stage and let you ask your question live. So yeah, check this out. It's going to be August 6th, this Thursday at 2 p.m. Eastern. So that would be 11 a.m. Pacific. So if you want to check that out,
that's going to be awesome. I can't wait.
And it's posted to our Twitter as well. So yeah, go ahead and check that out. And if you want to win some free CC, all you got to do is these. And I'm going to need to talk to them. They need to follow us as well. But anyway, we'll forgive them this time.
Yeah, no, I'm sure they just haven't gotten around to it yet. But hit them up in Telegram, and I bet that they'll get around to that real quick.
Oh yeah.
So
we got
next?
some deep dives. So what I want to talk about is, with the way that ADA, Cardano has been struggling. One of the things that we've pointed out is that, why we're not bullish on Cardano is that not a lot is built on it, specifically DeFi. It doesn't, there isn't a whole lot of TVL or value that's exchanged on chain, things like that. And I think that Midnight could potentially bring some of that to Cardano, depending on how that advances and how that grows. And so I wanted to do a deep dive on it today, both on that and on let's go to our website here. Actually, you know what? Do you want to bring up your screen because you're gonna be doing the deep dives?
Let's do it. Okay, so we're going to start off with Midnight.
Yeah, and then you mentioned yesterday that you were wanting to do ZBEC, and so I did ZBEC and Night is the ones that we did for today.
Yeah, so ZBEC Network. I'm interested in learning about that, but I want to start off with Midnight. So this is the privacy layer. I think it's built on top of Cardano. So
that's my understanding. Is this? Yeah. This was a couple of months ago. This was a huge, supposed to be a huge bullish catalyst for our Cardano, and I know that Charles Hoskinson has been very vocal about what this was going to bring to Cardano. Haven't seen a whole lot from it yet. And looking at the token, there's Cardano, but Midnight or the Night token hasn't looked too great either. And so I'd like to look in to see, kind of what they've developed, what they've built, and what it's doing.
Yeah. Yuck.
No, yeah.
Down only.
Yeah. So anyway.
Okay. So now that we've taken a look at the tokens, ADA from that all-time high above $3, it's trading just below 20 cents now. And then Night looks like it, after launching was down only. So I want to learn here about Midnight, though. This is the privacy layer. This is, I guess, the Cardano privacy layer. So let's go ahead. I'm going to play this piece of content.
This generated video of a transparent glass structure shattering against an impenetrable concrete firewall illustrates the core tension in enterprise blockchain adoption. Public ledgers require absolute transparency to function, but corporations mandate strict data confidentiality to protect proprietary business logic. Legacy privacy networks like Monero or Zcash attempt to solve this tension by enforcing blanket transactional anonymity directly onto their transferable liquid assets. That approach inherently triggers friction with international anti-money laundering and counter-financing of terrorism frameworks. The result is a cycle of global exchange delistings and restricted liquidity. Conversely, standard transparent networks like Ethereum or Cardano are unviable for most institutions. Broadcasting unencrypted commercial metadata to a public peer-to-peer network violates basic corporate compliance rules.
Can't have
The
that.
Midnight Network addresses this exact paradox. Built as a specialized Layer 1 partner chain within the Cardano ecosystem, Midnight architects a system called rational privacy.
Okay, so we've been learning so much about Canton. So you've got to ask yourself, as we're going through and learning about Midnight, why would an institution or anyone choose to use Midnight when you could just use Canton Network for this?
By decoupling the execution environment from the underlying asset. Solving this data paradox is the operational bottleneck for institutional Web3 deployment. Midnight's dual token model mathematically isolates sensitive data from liquid capital, invalidating the assumption that on-chain privacy requires regulatory friction. Midnight instantiated its Genesis block in March 2026, entering an initial mainnet deployment phase known as Kukolu. Currently, network consensus and block production are maintained by a federated consortium of node operators, including Google Cloud and Blockdaemon, to establish baseline operational stability. The technical roadmap schedules a transition to open permissionlessness later in 2026, during the Mohalu phase. This upgrade directly integrates Cardano stake pool operators into the consensus mechanism, allowing decentralized validators to secure the network. This 3D architectural stack begins with a foundation constructed using modular frame palettes within the Polkadot SDK. Running on top is the Aura round-robin block production engine. Operating asynchronously alongside Aura is the Grandpa finality gadget, locking the chain state to provide provable finality. With consensus established, Midnight addresses the standard execution bottlenecks of smart contract platforms by deploying a dual-state ledger. Midnight handles operations using a split data flow. On one side, parallel rapid streams of discrete data packets consume and create UTXOs for high-throughput execution. On the other side, interconnected nodes operate smart contract execution over account-based state representations for complex processing. This hybrid architecture purposefully isolates raw value transfer speed from complex stateful application logic. It constructs the precise execution foundation required to run a secure zero-knowledge environment at scale. The primary engineering challenge for enterprise privacy is mathematical. How can a decentralized network validate a specific state transition without ever receiving the sensitive raw inputs that triggered it? Midnight solves this at the developer level through its native smart contract language, Compact. Compact is a statically typed, domain-specific language derived directly from TypeScript syntax. The Compact compiler separates a unified codebase into two distinct streams, allowing developers to explicitly declare variables as either public on-chain or shielded local. This verification model ensures that sensitive user data remains permanently resident and locked on local client devices.
Right, but how do they allow regulators or lawyers to view these data without exposing it to everyone else? Like, how do you let certain regulators in? That's what you can do on Canton. That's built right into that DAML layer, like the foundational layer.
Instead of broadcasting raw data, the local client utilizes Halo 2 to generate a recursive ZK snark cryptographic proof. Only this highly compressed proof, alongside explicit witness assertions, is broadcast to the public peer-to-peer network for verification, leaving all raw metadata securely behind. This cryptographic mechanic enables what Midnight defines as programmable selective disclosure. In practice, this allows an enterprise application to verify compliance, identity credentials, or institutional asset solvency to a third party regulator
There we
without
go.
exposing underlying private business logic to competitors.
Got
By
it.
moving heavy cryptographic lifting to the compiler level, Midnight removes the technical barriers for Web3 developers to engineer fully compliant, zero knowledge enterprise applications. Analytical, even with a secure architecture, standard Layer 1 tokenomics contain a fatal flaw for enterprise adoption.
Now you got to ask yourself, which model is better? You know, the Cardano Midnight model, or some type of EVM model, or a Solana model, or is the Canton Network model for this type of selective disclosure the best? S-
I'd say watch, follow the money.
I
You
know,
know,
right?
what's being adopted, what's being used, what's being developed on. And I don't know a ton about Midnight, but I have not, in all of our interviews and talking with people, and I haven't heard of anybody building using Midnight.
Me neither. Have you ever met a Cardano developer? Like, do they
I I
exist?
I haven't. And, in looking at the data, it's just I don't see anything, really launching or bringing any value to the chain.
Neither have I. You know, I was reading something interesting last night, Mike, just as an aside, real quick. And I don't know if this is true or not, and I don't see how it could be true. But I read that on Stellar, that on XLM Stellar, that there are over 4,000 developers on XLM Stellar. How in the world could that possibly be true? There are like 5 dApps on Stellar. Like, I don't get that. But I did read that. Maybe it's nonsense. I'm going to continue playing with the midnight content here.
Requiring institutions to pay variable gas fees in liquid, fluctuating tokens destroys predictable operational expenditure models. Midnight completely bifurcates its economy to solve this, separating long term value storage from day to day execution resources. The first half of this system is the Night token. This is the liquid, unshielded capital and governance asset operating on a transparent public ledger with a strictly fixed total supply of 24 billion tokens. The second half is the dust token. This is a completely non-transferable, decaying execution resource utilized exclusively to pay for smart contract operations.
Wait, I want to hear that. I want to hear that last bit one more time. I'm just going to back this up a couple of seconds here. I want to learn a little bit more about that Night token.
Separating long-term value storage from day-to-day execution resources. The first half of this system is the Night token. This is the liquid, unshielded capital and governance asset operating on a transparent public ledger with a strictly fixed total supply of 24 billion tokens. The second half is the dust token. This is a completely non-transferable, decaying execution resource utilized exclusively to pay for smart contract operations.
Okay, so you got Night and you got Dust. So Night is the governance asset. Dust is used to pay for smart contract operations.
These two assets are linked through the battery recharge model. The
Battery recharge model. Okay.
generation rate of dust is a deterministic function of the amount of night held over time. Holding night emits a continuous energy trickle that fills an adjacent dust capacity gauge. Executing a smart contract consumes dust directly from this gauge. Crucially, expending dust does not deplete a single fraction of the underlying night principle. The capital asset remains completely unchanged, immediately regenerating more dust. This specific token design yields two major structural outcomes. The first is absolute regulatory risk isolation. Because dust handles the private execution metadata, but cannot be traded on secondary spot markets or transferred to peer wallets, it is mathematically impossible to use it as an anonymous financial currency. The second structural outcome is the creation of an enterprise capital sink.
You know something that always bothers me, Mike? If I back this up here a second, see this image? The guy in
Yeah.
the ski mask. Why is it that they always say that crypto is used for like crime or something?
Illicit
What?
activities.
What? Because if you want to be private or selectively disclose your
You're a
financial
criminal in some
information,
way.
you're a criminal. Like, make that make sense, man.
Yeah.
I don't like that.
Possible to use it as an anonymous financial currency. The second structural outcome is the creation of an enterprise capital sink. To generate sufficient continuous dust throughput to sponsor transaction fees for end users, decentralized application developers and institutional operators must acquire and lock massive reserves of night on their balance sheets. The battery recharge model transforms network gas from a volatile, recurring operational expense into a predictable, retaining balance sheet asset.
Maybe if I say ADA 3 times, Joseph will show up. You see that?
Yeah, right?
ADA, ADA, ADA.
That's right.
Institutional adoption requires executive integrity. Midnight is developed and stewarded by dedicated foundation structures and engineering spinouts originating from Input-Output Global. The leadership team features public executives with deep institutional roots across traditional finance, Symphony, and Citadel, proving a verifiable track record with zero history of malicious protocol design. Charles Hoskinson acts as the visionary founder for the project, initiating its incubation in 2021 to bridge Cardano's ecosystem with enterprise privacy demands.
Okay, so I don't think that having Chucky as the face of this is necessarily a good thing in light of his recent media appearances. I mean, he hasn't exactly inspired confidence, you know? So,
well, and
Despite strong-
one thing that I'm still wondering is, and I'm sure it will get to it, but the value capture, for Midnight is because, Cardano really doesn't have, solid value capture. I know that, he's been very focused on decentralization and, kind of the cyberpunk ethos and things like that. But I really feel like that it's held back the protocol from, getting any kind of, real adoption. They, added Midnight to add a privacy layer. There's been a lot of talk of adding stable coins to Cardano and, bringing DeFi to Cardano and things like that, but just haven't, nothing's just really materialized. It's a lot of promises, but, not a whole lot of delivering. And they're not the only ones. I mean, one of the projects I was bullish on in the past was Casper. Great tech, but just a lot of promises and not a whole lot of delivering. And not to say that these projects can't kind of rise like a phoenix. We've seen it before, but it's just with something that's this high of a market cap, I don't see the upside potential for the risk that you're taking. So anyway,
I mean, look, it doesn't. The project doesn't make much sense to me, to be completely honest. I don't see, why would you want to be on Cardano when you could be on Ethereum and its layer 2s, or you could even be on Solana, or now we're seeing the rise of Canton Network. I mean, we talk about this being the blockchain wars, and I think it's going to be, winner take most. So chains like Cardano, we're also starting to see a lot of chains die. And at a certain point, if there's no adoption, they can't incentivize validators to secure the network any longer. That's when the chain dies.
Well, we can't stress it enough. If a project does not have adoption, they cannot generate fees and revenue. Without fees and revenue, they have to dump their token to come up with money, either get investors who are going to want, probably tokens, for, their investment. And we've seen, VCs and stuff like that, when those tokens vest, they like dumping them on the market. So either you have a project that, doesn't make fees or revenue. They're either dumping the token themselves, or they're getting money from people that are going to dump the token. So if it's not generating fees and revenue, to me, especially a project that's this old, I see that as being a red flag. And, and if the token doesn't have value capture, even if it is generating fees and revenue, what does that mean to me, the token holder? Nothing if there is no value capture.
I think that Cardano and Midnight are going to fade off into the sunset and disappear. Because, I mean, look, unless they can suddenly fix all the problems with the protocol and get commercial adoption, it's been around forever. Like, how long is it going to take for them to start making this thing work? Maybe it will never work.
Ecosystem with enterprise privacy demands. Despite strong institutional backing, the network faces severe economic headwinds, specifically driven by the supply inflation built into its initial distribution program. This descending pressure curve charts the mechanics of the glacier drop. The program allocated 4.55 billion tokens, subject to a strict 450-day linear thawing schedule, releasing incremental tranches of token liquidity into the market every quarter through early 2027.
Uh-oh. So this is the dumping. They call it the linear thawing, but this is their dumping schedule.
Beyond tokenomic inflation, the network must navigate critical security realities stemming from cross-chain interoperability. This visual of a glowing data bridge fracturing and spilling assets into a void represents exactly what happened on July 20, 2026. Malicious actors exploited a vulnerability in a third-party WAN chain connection, siphoning off approximately 515 million bridged Night tokens.
Wow.
While Midnight's core Layer 1 zero-knowledge execution environment remained completely uncompromised, the failure of third-party bridge architecture exposes severe attack vectors.
So you know what we haven't ever heard of, Mike? An exploit on Canton Network. Can you
Not
recall ever? No, and hopefully never. But, haven't heard of one of those.
While the
Knock on
foundational
wood.
cryptography is
Right, knock on
undeniably
wood.
secure, the network must continuously absorb intense supply inflation and ruthlessly mitigate off-chain dependencies to survive its deployment cycle. The Midnight Network is a highly specialized architecture designed specifically to dismantle the data confidentiality and cost predictability barriers blocking corporate blockchain adoption. The upcoming Mohalu phase will permanently tether this privacy engine directly to Cardano's decentralized, battle-tested security layer. However, the ultimate dependency for long-term viability rests entirely on developer adoption. Engineers must actually write and deploy logic using the compact smart contract language. If enterprise adoption of these selective disclosure primitives scales, the necessity to fuel them will force institutions to relentlessly acquire and lock the liquid token supply. Midnight proves that regulatory compliance and zero-knowledge privacy are not mutually exclusive. When executed correctly, they provide the specific cryptographic framework required to reconcile public ledger transparency with institutional data mandates.
Yeah, no, except it's gone. So yeah, I just don't see this. I don't see this gaining any traction at all. And if you take a look at the token, if we just bring up that Night token one more time, I mean, look, sometimes the market will tell you what it thinks of a protocol through price action. When you see down only for a token, it's never a good sign. Down only, not good. Okay, so that's enough about Cardano and the Night protocol. Let's take a look
really quick.
go ahead.
We had somebody ask a question. Welcome to the show. And Aspen Hamzat, hope I pronounced that right. So you asked, you host devs, founders, and projects on your show. Do you have any docs that I can read? So yes. So let me remove this, add this to stage. If you want to check out our website, go to the node.pro. Go to the Intel library, and this is all free. And you can go through all of these deep dives that we have done on the show. We do 10 a week, 2 a day, Monday through Friday. And you can go through, and all of these have plenty of documentation. We cite all of our sources. I'll click into one and just kind of show you. And at your leisure, you can watch the videos like the ones that we just watched. You can read through all the documentation that we have. If you want to check out the slide deck, you can go through and you can, if you're more of a visual learner, this is kind of the elevator pitch. This is just, kind of a one slide that kind of, tries to encompass it all. But the most important document I feel is the source document. And if you go here and you scroll to the very bottom, we always cite our sources. I cannot stress the importance of this enough. I don't know of any other channels out there. A lot of people will give good information and bad, others will give bad information. Some will give their opinion and try to state it as a fact. Here, we only state facts and we cite where we get the information from. So they're all hyperlinked. So you can go and you can verify, read through the material, make sure that it's accurate, make sure it's correct. But we always cite our sources here. Can't stress that enough. So hope that answers your question. Welcome to the show.
100%, man. Super important what you just said, Mike. It's facts, not FUD. Like if we state a fact and we have primary sources to back it up, that's not FUD. Okay, so let's take a look at Zebec Network, ZBCN. This is Zebec. So we've got a level of resistance up here, trendline resistance. We've got a level of horizontal support. Okay, so the pattern doesn't look horrible. Let's go ahead and take a look at that deep dive research on Zebec Network. I'm interested to learn more about this one. So I'm going to go ahead and share this to the source room for anyone who wants to take a look at this as we run through this piece of research. Here it is. So let's hit play.
When a digital asset reaches its absolute maximum supply limit, the economic mechanics of its underlying network are forced into their final form. On March 16, 2026, Zebec Network reached this exact milestone. The protocol released the final scheduled allocation of approximately $2.2 million worth of ZBCN, bringing nearly 99% of its total maximum supply into active circulation. To understand the sheer scale of this circulating supply, we have to look back to the 1-to-10 token split executed in 2024. The protocol expanded its hard cap to 100 billion ZBCN to drive down unit prices. The goal was to simplify gas fee calculations for micro-denominated payment streams, targeting a nominal execution cost of roughly 1 token per transaction. Reaching this 100 billion cap meant the cessation of all scheduled token emissions. The multi-year vesting schedules originally assigned to early private investors, seed round participants, and core founding team members permanently concluded. This table tracks the post-2026 token allocation matrix. Notice the columns for the core contributors, private sale investors, and seed rounds. These categories are now completely unlocked, with no future emissions owed to the project's initial backers. This transition removes the venture-subsidized incentives that most Web3 protocols use to maintain user interest. Historically, networks that lose their scheduled token emissions struggle to retain volume unless they have already established a source of demand independent of speculation.
Right, so they need a real organic volume on the protocol or on the chain in order to survive at that point.
Survival in this post-unlock environment requires a move toward what the industry defines as real yield, where strictly
revenue.
Real yield. And it
real
says
yield.
from commercial transaction volume. I think that there are Zebec cards. So let's find out. Are people using these?
Rather than the distribution of new tokens. For Zebec, this transition hinges on a specific architectural strategy. The protocol must bridge its continuous on-chain payment streaming technology with legacy automated clearinghouse rails. If successful, those enterprise integrations fuel a mathematical, deflationary token buyback engine. This equation defines the deflationary buyback engine. We are looking at the dynamic rate of supply reduction, noted as delta S over delta T. This rate is determined by gross revenues, multiplied by allocation coefficients, and divided by the token's market price. Pay close attention to this supply reduction variable. Tokens purchased with revenue are routed to an unspendable burn address, permanently removed from circulation.
Okay.
This programmatic reduction of the supply denominator operates on different economic principles than the promotional staking yields typically found in decentralized finance. Zebec's mobile super app offers a promotional staking yield up to 15% APY, drawn from a static 50% community treasury allocation. This mechanic redistributes existing supply to active stakers, creating an internal closed loop, rather than generating external economic value. The protocol utilizes the deflationary buyback model instead of distributing net fiat profits directly into stakers' wallets for a precise legal reason. Direct profit sharing introduces regulatory risks regarding unregistered security dividends. Buying and burning the native token bypasses these legal tripwires.
Right, we see this
The
all over the
entire
place.
viability of the system relies on the R variable. Commercial enterprise cash flows are the sole engine powering the supply contraction. Because the token has reached maximum circulation, a holder's entire value proposition is now mathematically linked to the protocol's ability to extract and scale fee revenue from real-world financial activity. This architecture model illustrates where commercial revenue originates. The ZBEC stack comprises 5 vertically integrated product layers: WageLink Payroll, the ZBEC Card, Nautilus Layer 3, ZBEC Safe, and ZPin hardware. Zooming into WageLink, stablecoin data packets route from the protocol directly into traditional Web2 human capital management platforms. WageLink generates protocol revenue by levying processing service charges on employers. By transforming traditional bi-weekly batch payrolls into continuous second-by-second salary streams, ZBEC captures fees directly tied to disbursement volume.
That's
Moving
interesting.
across to the ZBEC card layer, the revenue model shifts to consumer retail spending. The crypto debit card connects non-custodial wallets to global Visa and MasterCard networks across 138 countries. Every time a consumer initiates an automated fiat conversion, a fraction of the interchange fee is allocated back to the ZBEC treasury. Beneath these applications sits the Nautilus chain. By isolating payment streaming and microtransactions on a dedicated Layer 3 environment, the protocol avoids the congestion of general-purpose Layer 1 networks. As an EVM-compatible execution layer, Nautilus actively consumes ZBCN as its native gas token to process these continuous microtransactions, creating baseline network demand. To stabilize this settlement architecture, the protocol integrated World Liberty's USD1 stablecoin in mid-2026.
Okay.
This serves as a primary settlement asset for automated payroll streams across all of these integrated layers. According to documentation, these combined revenue streams drove token buyback volumes to expand at an annualized rate of over 70% into the 2026 unlock. This entire vertically integrated product suite functions as a single coordinated funnel. Its sole purpose is to convert hybrid financial activity into open market spot purchases of ZBCN. When decentralized streaming technology connects to legacy banking infrastructure, the transaction data effectively vanishes completely from public view. In 2026, ZBEC formalized its presence within traditional finance by joining Notch's Payments Innovation Alliance. This governing organization oversees the U.S. banking system's clearinghouses, placing ZBEC alongside members like JP Morgan, Wells Fargo, and ADP. This integration allows the protocol to route corporate payroll, originating on Web3 stablecoin rails, directly into the $85 trillion U.S. automated clearinghouse network.
Wow.
This split screen highlights the tracking discrepancy. Standard DeFi relies on the static reservoir on the left. Aggregators measure total value locked by counting capital sitting in these static pools. Because ZBEC doesn't hold capital in static pools, aggregators undercount its liquidity. Payment finance capital behaves like the pipe on the right, passing dynamically through smart contracts in real time. This dynamic movement, combined with the U.S. banking integration, introduces a core structural limitation: the verification paradox. Because massive portions of ZBEC's payment flows are routed off-chain through private NatPay and ACH ledgers, independent on-chain auditing is structurally impossible. A block explorer cannot trace a transaction once it enters a centralized banking ledger. Consequently, analysts are forced to rely on self-reported commercial traction and off-chain documentation rather than verifiable blockchain metrics. Evaluating the institutional health of this protocol requires trusting corporate audits over cryptographic proof. Relying on those enterprise integrations exposes ZBEC to dual-front market competition. Developer-focused payment protocols like Superfluid are competing for crypto-native decentralized autonomous organization payrolls. Simultaneously, Web2 incumbents like Gusto are piloting native USDC contractor payouts, wielding massive established distribution networks. This stark typographic model maps the intense regulatory compression applied to hybrid protocols. Operating a global debit card and automated clearinghouse pipeline requires navigating complex, multi-jurisdictional compliance frameworks. Maintaining operations across 138 countries requires strict adherence to local anti-money laundering laws, know your customer rules, continuous SEC oversight, and costly state-by-state money transmitter licensing in the U.S. Furthermore, Zebek's 2026 white paper filing under the European Union's enforced MiCA guidelines presents heavy, ongoing legal and operational costs that actively threaten to constrain net profit margins across the entire European economic area. The underlying math of the deflationary buyback engine is entirely unforgiving. If compliance costs erode profit margins, or if Web 2 competition causes protocol fee revenues to plateau, the revenue variable drops. Without expanding commercial revenue, the deflationary mechanism will fail to exert upward price pressure on a fixed denominator of 100 billion tokens. Zebek Network functions as a direct proxy for the scaling of payment finance into legacy markets. By bridging continuous streaming technology to traditional banking rails, the protocol forces investors to make a definitive choice, sacrificing the absolute data transparency of public blockchains to gain access to the massive commercial scale of institutional finance.
Okay, how do we get a window into some of the numbers for this protocol? Like,
That's
if
what
it's
I've been trying to find. Is I'm trying to find a place that, because I was wanting to see, what the analytics look like, the data looks like for the burns and, the network usage, and I'm having issues finding some place that to view all that. I mean, are you able to find anything?
I think you could maybe go to the Zebek website. Maybe that's the place to go. What do you think?
Let's see what we can find. I found one place, but you have to pay. Let's see, Zebek Network.
Okay, what's the website for Zebek? Yeah, let's take a look at this, Mike.
So products, we got payroll, DPIN, super app, early access, buy state, governance, tokenomics, company, compliance about. Let's try launching their super app. This is something that we could probably have Crux on, because I know that he's super bullish on this project. So maybe we could have him on, or one of the other people on the game show, because I think a couple of them are really bullish on Zebek. And to full disclosure, I know nothing about this project. That's kind of why we wanted to do a deep dive on it. Is I really wanted to learn about it, because there's so many people that we collaborate with that are bullish on it, and I can see a lot of potential for kind of real time streaming, like salaries. So like if you're getting paid a salary, or you're getting paid by the hour, you could get paid by the second. I mean, it could just trickle into your account, and then you don't got to worry. You don't have to wait for payday. If you have a bill to pay, and you have you have the money, as long as you're budgeting, of course. But I really like that idea that you can get your money as you're working. So if you work for an hour, then cha-ching, an hour's worth of your wages show up. Another hour, cha-ching, another hour of your wages show up. So yeah, waiting for sometimes waiting for payday sucks. So I mean, yeah,
I think that this looks really cool too. I just want to be able to get a window into, like, because the deep dive research was basically saying, like, the revenue is the most important variable here for US dollar value of that token, right? That ZBCN token.
See if you can find anything data wise that shows like on chain adoption, transactions, or the burn, what is the rate of burn over time, relative to the supply. I'd be really interested, because I mean that's really going to determine if I'm interested in this project, is going to be if it has solid value capture.
Me too.
It looks like their super app is on Solana, Ethereum, Base, BNB. Never heard of Zono, and then XDB chain. Never heard of that either.
So I'm looking over here at Crypto Rank.
All right, let me pop it over to you.
Yeah, so here's crypto rank. This is Zebek Network, ZBCN. This is news, but I want some analytics. Let's take a look. Let's take a look at the analytics here. Okay, so that's just prices, dollar change. It's not really much analytics. Historical data, maybe.
Well,
Nah.
there's at least some returns. It was showing like quarterly returns in USD. That might give us an idea of profitability.
Nah. So here's the team. Okay.
So SVJ is saying there are no burns. They said only buybacks supposedly. I could have swore that it said that it was sent to an address that basically permanently takes it out of circulation. So it burns the fees. That was my understanding from the video. Did I hear that right?
That was my understanding too. Sometimes learning about the people behind the project can be useful, but yeah, difficult to find information about this. So maybe in their official documentation, maybe there's some information about it here. Developer docs, API, deprecated content, Zebek platform at a glance, cards, yield, fiat, streaming, payroll. There's the super app, enterprise payroll, App Store, Google Play. Okay, I'm just
250 plus enterprise clients, 18 plus chains, 150 plus tokens integrated. So far, they've done 500 million in annual payroll volume, 50,000 more, over 50,000 monthly users. But I want to see some data and some analytics, some freaking charts that show this data on chain. It's one thing to make claims, it's another to again cite your source, show the data that supports it.
Yeah, I mean, I really just want to be able to see, some dashboard somewhere that tells me, how many users do they have right now? How much transaction volume are they driving? Is it going up or down? This should be kind of basic stuff, right? Why is it proving to be so difficult to find? I'm going to take a look at Dune. Maybe there's something on Dune Analytics for these guys. I mean, there should be something somewhere, right? Like, let's just see what we got here.
Well, while you're looking that up, I found something that says Zebek's token design is built around fee conversion and inventory management, not a low float story. So it positions itself as a real-time payroll and payment stack that sits across multiple products and rails. In that design, ZBCN is framed less like a base chain gas token and more like a settlement and incentive asset that gets pulled into demand by product fees, staking programs, and card usage via its January 2026 update. The most important microstructure takeaway is simple. The market is already staring at a very large float. That changes how you should think about tokenomics. With a near fully circulating supply, the price path is dominated by one, where the remaining inventory sit, two, how predictably they move, and three, whether fee conversion and buyback execution is visible and consistent enough to anchor liquidity providers for a contrasting case study. I agree. We need visible, and I'm just, where is it visible? Where can we see? Here's an CoinGecko's on-chain supply panel. Let's see what that is.
Okay, Nautilus Chain Explorer. I think I found something here. So we got the Nautilus scan. What just happened? So it's telling me that is this down? Nautilus scan is down. Maybe this is the wrong The wrong URL for Nautilus Scan. Okay, not scan. What about Sol Scan? ZBCN token tracker on Solana monitors that. Okay, give me links to Nautilus Scan. Because wasn't Nautilus the layer 3 where like all that volume goes?
It should not be this hard to find data.
No, and the Nautilus scanner is either down or I've got the wrong URL. It looks like they're both down. So I'm going to ask it.
So it looks like SVJ's having the same problem. He says, I've been trying to find the same on-chain data. Trust me, it's hard. I haven't been able to find much.
Dude, that's a problem.
Yeah, that's a big problem. You know, with
like, how do we verify any of this? Because, you know, like partnerships don't mean anything if you can't actually verify any of the data.
Well, and they can say that, you know, that they're partnering and they're you know, they're on, you know, they're live on the chain and they're, you know, processing transactions or whatever. But okay, you know, what is that doing to the token supply? You know, if there is a burn mechanism in place, you know, and I'm not saying there is, but let's just say for, you know, an example, they're partnered with Visa. You know, that's, you know, kind of the big one with these cards and stuff like that. And, you know, for all the fees or the transaction fees, when people use the card, if those are being burned, at what rate? You know, is that, you know, $100 a day, you know, or is that $100 million a day that's being burned of the token? You know, that's the kind of stuff that we want to see to get an idea, because, you know, that's our major complaint with a lot of these projects that have, you know, value capture, like, XLM, you know, XRP, you know, their gas is so cheap, you know, 0.00001, you know, per transaction, that it would take thousands and thousands and thousands of years at max TPS to even burn a fraction of the supply. So, you know, without data, without being able to look to see, you know, the rate of the burn relative to the total supply, there really is no value to say that there's a burn. You know what I hope that
I
agree.
That makes, no, it did make sense. I'm just searching right now for. Okay, it says not scan is currently down and offline. Nautilus chain was officially terminated and halted in September 2024, leading to the deprecation of its block explorer and associated infrastructure. Zebek's primary operations are focused on active networks like Solana.
You know what?
I've got to use SolScan.
Let's reach out to Crux and see if we can loop back to this, because I mean, we're running out of time. Let's see if we can loop back to this. Maybe have him on and have him show us.
I think I found it.
Okay, go ahead.
Okay, so it's Zebek network on Solana. So our research told us that this was like its own chain, but it looks like it's not anymore. It looks like now it's actually like just on
layer 2 on Solana.
It's just on Solana. Like, is this just a token on Solana now? That's kind of what it looks like. It looks like there's Zebek on Ethereum also.
So, yeah. I was showing that before. It's on Base, Solana, Ethereum, and a couple of other ones, 2 of which I had never heard of.
Okay, so here I want to take a look at the source document. That's what I want to look at here. I want to see some of those sources so we can see, like, you know, where this information came from in that deep dive research. So I'm just going to take a look at this. Okay.
This just left a lot of questions.
Yeah, KuCoin, Zebek. So these are all like blogs of centralized exchanges. Femex, BitGet, FinTech Futures is a blog. CoinMarketCap. Okay, Solana, MetaMask, ZipMex, Business Model Canvas, whatever the hell that is, Binance, OKX, Folio, CoinMarketCap,
Circle,
Circle, yeah. So I mean, okay. SEC. This is a podcast. Coin Bureau, so value. Why is it so difficult to find primary sources about Zebek Network without going to their website? Like, you shouldn't need to go to their website to get information about the project. You should be able to find other primary sources where people are talking about this, outside of just looking at centralized exchanges and blogs.
Let me reach out to Crux and see if he'd be willing to come on and kind of give us a rundown on this, because it looks interesting, but I there's a lot of questions and potentially red flags, because we've never run into it being this difficult to find information and to find data. This is blockchain. It's there's swing a dead cat and you can hit a data aggregator that's going to give you data on just about any crypto project. So
I don't know, man. Yeah, you should
easily
be able to find information about a project like that. It's got a $200 million market cap, for God's sake.
Yeah. So
well,
been around.
Let's wait to hear back from Crux.
All right. Yeah. No, like I said, I know that he's very bullish on it. So, and I know he's done a bunch of deep dives on it. So if, if you're interested in this project and want to hear from somebody that's, actually knowledgeable about it, go over and check out Crux of Crypto. He does great deep dives. And, like I said, he's very knowledgeable on this. Again, full disclosure, I've never really looked into Zebek. I've heard people talk about it, just never really interested me. But some of the products that they're building out do use cases
look
do
interesting.
Sound, they do sound interesting. So I would be interested to find out where I can look at data to see if it meets our trifecta. And again, just with the what we generated, it wasn't able to extrapolate if this had good value capture or not.
And then we weren't able to verify anything about it. So I think we need to pause and wait for more info.
Yeah. I'm not willing to give this a grade yet. So
no, me neither.
Awesome. Well, appreciate you all for showing up. Hope you found the interview and the rest of the information informative. And we promise we'll loop back with more on Zebek. And until then, what do we got going on the rest of the day? Today's Tuesday.
So I think we got
tonight.
We got tonight. We got Crypto Trenches. Yep.
We got, so join us tonight. We're going to be talking about basically just going to go through, and we'll have some information, some claims that content creators on X and YouTube make about crypto projects, and we're just going to fact check them. Either prove them right or prove them wrong. And until then, Veteran Crypto out.
Peace.